been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is President and CEO of Toben Partners, Thomas Jorglewich. Now, Toben Partners is a Christian-centered real estate investment and management company guided by biblical principles and a servant's heart. They specialize in strip and neighborhood shopping centers ranging from 10,000 to 50,000 square feet in size. Now, we first had Thomas on the show nearly 6 years ago, way back on episode number 33. We've done, more than 300 episodes since then, and so it's been quite some time. And so I'm excited to catch up with Thomas and find out what's new and really what he's been up to since we last spoke. 6 years is a very long time, and so excited to have him back here. But before we get into it with Thomas, just have a few quick items to run through. First and foremost, just a quick announcement regarding our third mobile home park investment fund. We recently launched. It's live and we're accepting capital. If you're an accredited investor and you have an interest in partnering with me and my team on future mobile home park investment opportunities, you can go over to investwithsunrise.com to learn more. Again, investwithsunrise.com to learn more. You can access our PPM and offering docs there on that website, and also review our most recent webinar that we put up about the offering, and just really come find out why we love mobile home parks so much. Again, that's investwithsunrise.com. Moving on here, guys, if you love what we're doing at the Real Estate Investing for Cash Flow podcast, take a moment to subscribe to the show, and also if you haven't done so, leave a rating and review on iTunes. That's how we attract awesome guests back again for a second time, like Thomas's show. If we're not getting good reviews and people aren't coming and listening, and guests aren't going to come on. So please take a moment, leave that rating and review. And lastly here, I want to remind you of the free 30-minute call I offer each and every Friday afternoon, where I set aside 30 minutes of my time to jump on the phone with you, the listener. And I've spoken to hundreds of you over the years, and there's no ulterior motives here. I'm not here to pitch you on a sales program or a training program, anything like that. Just a way for me to connect with others who share a similar passion for real estate investing. Whether you're a brand new or seasoned pro, go to my website, kevinbupp.com, to schedule that call with me. And so with that, guys, I'd like to welcome back Thomas Jorglewich. Thomas, how you doing today, buddy?
Hey, Kevin. Hey, thanks for having me back. Merry Christmas. Happy New Year.
Same to you, my friend. Excited to have you back here. And again, as we were talking before we started recording, 6 years, it's crazy. That is a very long time. I know I have a lot more grays. In fact, I don't know if I had any grays then, but now I have a lot of them. I got grays and I got kids. I think I maybe had one brand new kid. I think maybe we talked 6 years, but now, so now full-blown family. So times definitely have changed. So again, excited to have you back here, bud. Looking forward to catching up and finding out what's new with your business, what's transpired over the last 6 years. But, for those folks that might not be familiar, might not have listened to episode 33, might not know about you and your business, maybe take a few moments, just tell us a little bit more about yourself, your background, how you got into real estate, and, ultimately what was the catalyst to start Toben Partners?
I'm originally from New York, and I moved down to Georgia. I guess I was 24 years old and didn't quite know what I wanted to do. So I kind of bounced around for about 7 years until I got into real estate. And I started out with a real small brokerage firm up here, and it wasn't a lot of guidance. So I didn't really know what I was doing. And I kind of just followed different people and kind of stumbled onto the real estate of basically investment real estate with shopping centers. I didn't know a lot about them. I kind of bumped around, and I never quite got a listing. But then Marcus and Millichap, I don't know if you've heard of them. They're quite a big, large brokerage firm. They moved to Atlanta. So I kind of interviewed with them and got a job. And they actually were very helpful because they had a great training program. So I stuck with the retail, and I stayed with them for about 3 years. And a lot of the people I met that were doing really well, I kind of thought, well, these guys aren't that much smarter than me. If they're doing it, I can do it. So that was kind of the kick in. I was like, well, let me give it a shot. And one day I was driving around and found a piece of land. I was like, wow, this would be a great place for a shopping center. And didn't know much about it. I made an offer, just kind of make myself feel good about going for my goals, and the guy actually accepted the offer, which I wasn't expecting, and I had no clue how to build a shopping center. So he accepted it, and I started reading books. I'm like, what am I going to do now? And just kind of figured it out. It was a lot easier than I thought it would be, actually. So that was my first one up in Ackworth, Georgia, and just from there, it was kind of cookie cutter. Each one I'd go into the next one. Once I got it leased, I'd go into another one, and just kind of built it up to 4 centers. And I still have them today. Actually, I haven't sold anything that I've done. I've got 2 other ones that I purchased during the 2008 recession there that were kind of vacant, and I kind of rehabbed them up over and leased those out. So so far, so good.
Wow, very, very interesting. So let's back up a little bit, and I'm going to dissect a little bit of that story. So you were a broker for about 3 years. Did you, when you made that offer on that piece of land that, again, you didn't think they would accept it, ultimately they did, and now you had to figure out how to develop this shopping center. Were you still actively brokering deals with Mark Similchap, or had you kind of stepped out? And
actually, one of my clients, I started managing their properties, their portfolio. So that was kind of my lead, and I wanted to get some experience in how to lease and manage. And as I was doing that, I made the offer and I got accepted. And actually, after I started building that, the guy found out and didn't like the idea that I was working on somebody else's property. So that kind of ended. But it was a good move, actually, because it kind of made me hustle more and make sure that it would work out well.
Yeah. What were some of the biggest challenges you faced there with that first development property? Like you said, you had never developed a property. I mean, you had never even bought a retail property, let alone develop one, right? That's a completely different animal in and of itself. And so, what would you say were the best guiding moments of getting that deal done? I mean, were there certain mentors you reached out to, maybe the gentleman that you were, managing his deals for him, what have you? I mean, what were some of the steps you took to truly get from point A to point Z with that property?
Well, finding a good contractor, I actually ended up making the landowner's son became a partner. They had some great banking relationships, and that's actually how we got the loan. Because I didn't have the finances to get the loan on my own. So he was my first partner, and he was a home builder basically. So he didn't know much about retail either, but we found a good builder that worked along with us, and he was kind of instrumental to get started. So as he was doing the building, I was actually trying to lease it up. And actually that kind of went well because we actually got it leased before he was even done building it. So it was fully leased. So that worked out well. But I hung out a lot of times on the site to learn because actually after him, I started building my own. I was actually my own contractor and ended up saving a whole bunch of money doing that. But I learned a lot in that first deal. I mean, I just being there every day. Luckily, my expenses were low, so I was able to do that. It saved up some money from my brokerage days, so I was able to spend a lot of time on the property as they were building it. And I learned a lot that way. So that was kind of, my boot camp.
Okay. Sounds good. And how has your business changed, since that first property to where we're at today? I mean, have you, I'm sure there's been evolutions, but has your focus changed at all? The types of properties that you build or purchase, has that shifted? I mean, what are some of the major changes that have occurred in your business?
I guess my focus really hasn't changed. I've stuck with this little small strip shopping centers. Maybe the way I manage, I guess, I became a Christ follower over the last 6 years, and that's kind of changed a bit of my attitude towards managing my properties. And I've got more of a trying to service attitude where I'm trying to help people as opposed before I was kind of a little tough. And if people didn't pay the rent, I would take them to court. I actually haven't taken anybody to court in 6 years, so it's worked out well. If they left, I just let them leave. And I've been more trying to help people as opposed to trying to help myself. So that's been a big change for me. Because instead, coming up being a broker, it was always about working it for yourself and working hard for yourself and not caring about anybody else. So the attitude switch, I guess, for me was the biggest thing. And it's helped. We're still 100% leased, even through the pandemic. I mean, we've helped out people that couldn't pay the rent. We gave people half month's rent for a couple months. So, it's just a different attitude, I guess, from what I used to have, has been probably the biggest change. But as far as the focus, we're still, the small little strip retail centers on like mom and pop type tenants. I don't really have any major tenants in any of my properties. It's mostly just mom and pops.
Okay. Well, let's, being that you brought up the pandemic, I'd love to, touch on that topic. I hate the word retail apocalypse, but it's what you see in the mainstream media. So we're going to roll with that one, right? I mean, we're going to roll with the retail apocalypse that has been, coming our way, and now it's just really been doused with jet fuel due to the pandemic. And I mean, there's been some really large retailers that they were probably destined for bankruptcy anyway. Let's just push them quicker to that brink or to that edge. Neiman Marcus, JCPenney, Brooks Brothers, GNC, Jake. I mean, there's a ton of them, and probably many more that will be falling off that cliff here in 2021. What you mentioned that the pandemic hasn't really impacted you long-term per se with your type of neighborhood tenant base. I know that there might have been a few rough months here, there. And just for clarity, for those that are listening, you're based in Georgia. You're up north of Atlanta area. Georgia is one of the states, just like Florida, that's handled the pandemic a little differently than some of the, I guess, northeastern or the western states, as far as businesses being open and the governor really being pro-business and trying to get things back to normal, and not allowing businesses to fail, allowing to open up and operate accordingly. But I'm sure that's had a lot to do with it as well. But just generally speaking, what major changes do you see coming about, not just with your own centers, but just over the next 3 to 5 years in the retail sector as a direct result of the the pandemic impact?
Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my 2 podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche, and that's the phenomenal niche of mobile home park investing. Now, for those that don't know, I've been a full-time real estate investor for more than 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in Growth and Income Fund 3. When you invest in our fund, you get immediate diversification into multiple deals we acquired off-market that are already performing and have built-in sweat equity. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please visit us at investwithsunrise.com and request access to the investor presentation. It's absolutely free, and you'll get instant access to review the off-market deals that we've already purchased that you can co-own with our team. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-227-4359, and our investor relations team will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule the call. Let's jump on the phone. And with that, guys, I'd like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show.
I think for me, most of my tenants have been fine. I did lose the dry cleaners, but I don't think he was doing that well even before the pandemic, and that kind of just wiped him out. But I was able to release that probably about 2 months later. But for me, I think the restaurants seem to be the ones that are struggling. I do have a Subway that went out, but I'm still on the lease with Subway, the corporate, and I don't think they're going to be renewing it. That's up in a couple months. But I've had it now for 6 months trying to lease it myself, and I haven't been able to find anybody. So I think the restaurants are going to be taking a huge hit. I know here in Atlanta, they've closed so many smaller restaurants, even with the pro-business. I mean, people just, I guess, don't trust going into a restaurant or a small restaurant, not knowing what's going to happen. I mean, that's been the biggest for me. My biggest fear is because I have a couple of restaurants and a bunch of them, and they seem to be the ones that were hurting most. They've been paying their rent, but they also been the ones that most have been complaining about the lack of customers and such. Mm-hmm. As far as anything bigger, I said it hasn't really. I mean, they like everybody else, they had a little hard times, but I mean, nobody else, or the different types of tenants, no one else has gone out. No one else has said they wanted out. It was about 3 months was maybe a tough time, and then it seems to have come back. But as far as driving around Atlanta here, I mean, I've driven around, there's some shopping centers that, it looked like they're vacant. They lost a lot of tenants, and I was kind of shocked because they were kind of small like mine. And I was kind of shocked at seeing that happen. But as far as the big tenants, I mean, I don't have any big tenants. I don't really follow that market much because it's not something that really affects me. Yeah. But I mean, obviously, it's in Atlanta, there's been quite a few larger retailers that also taken a huge hit and, went out. But luckily that hasn't affected me.
There was and I can't recall the company name or the group, but there was a gentleman I interviewed, maybe it was earlier this year. I can't recall this year, last year, but it was in the retail space, neighborhood retail, very similar space than yours. I forget which markets they were in, but they were in the Southeast, but multiple different markets. And he had a unique perspective on, and he had also come from the institutional side of retail, and so he kind of had both flavors, and their entire business was built on now neighborhood retail, and they had quite a significant portfolio, probably about $500 million portfolio. And his perspective was with the neighborhood mom and pop tenants, the big difference that he saw when compared to a national franchise, a corporate tenant, is that when times get tough, that mom and pop tenant, more than likely, like everything is riding on that business that they have there. And so you push them into a corner, they will, even if they have to sleep in that retail store, if they sleep in their store, or sleep in their restaurant, they'll do whatever it takes to the last dying moment to save their business and to, pay their rent and to, keep that roof of that business open. Whereas with a corporate tenant, it's more of a boardroom decision. Right. It's, there's not really any emotion attached to that decision. Whereas with the mom and pop tenant, they're very much it's all emotion. Do you feel that? I mean, do you feel that's an accurate statement?
I've actually have two tenants. One guy lost his home and he's actually living in this space. And I'm like, dude, you're not supposed to be doing this, but that's up to you. If you get caught, you deal with that. I don't want to know about it. So unfortunately, I mean, it is happening. I mean, hopefully, as far as I know, he's still living there. I'm trying not to, if he's paying his rent and then I'm cool with it. But I mean, that's not something they're supposed to be doing. But I'm not going to kick somebody out, something like that. I mean, obviously he's going through a hard time, and if that's what he needs to do, that's fine with me.
Yeah. What do you think some of the vacancies that you have, what do you think you'll have to do here over the coming year to lease that space? I mean, do you think or have rents come down, like in your centers, is the price per square foot down from what it was pre-pandemic, or is it still holding tight?
I haven't. I had, I guess, two tenants that leases were up that they didn't renew. And I was surprisingly released them rather quickly at the same rates. So as of yet, I haven't had to take any hit yet. That may change in a couple months, but I mean, as of, I guess that was last month and a month before that when I had released it, and nothing, got the exact same rent. So,
what industries were the the new tenants that came in? What industry were they in?
One was actually did a temp service. He took in the dry cleaners. And then the other one was actually, it was a yoga studio that left, and a nonprofit moved in and made it office space.
Okay.
So, that was something that was a little different. I mean, because it's actually a little retail center, but I mean, obviously, I need a tenant, and they were a good tenant to come in. They had longevity where they were before. So.
Yeah. I didn't think about the dry cleaners struggling now because people aren't going to an office. And so people aren't getting their dress shirts dry cleaned as much. They're not going to, in certain parts of the country, not going to church services or maybe as much as they would have to where they might wear a nice shirt and a suit and some pants. Everyone might just be wearing the top part in these Zoom videos, but the bottom part's not even there. Right. And so obviously that affects the dry cleaners operations. Whereas, pre-pandemic, I would have never, dry cleaners seem to be like a staple. But I'm wondering across the country if that truly is having a major impact on dry cleaning operations. I would think it has.
He had a few locations, and I think he lost them all, unfortunately.
Wow. Yeah,
and he was trying to sell, and he couldn't sell them, and unfortunately, so that's why mine was just a pickup. He had a plant somewhere else, which I understand that wasn't doing what was going out as well. So unfortunately. I haven't seen a bunch of dry cleaners go out, but I mean, they're still in the market. Obviously I don't know, how they're surviving like that.
Yeah. How big of a revamp is it to actually, convert that dry cleaning spot? Most dry cleaners nowadays, and correct me if I'm wrong, most of them have like a centralized plant, and in their retail storefront is really just a place for a pickup and drop off. Is that how this was?
Yeah, all they had to do was rip out. They had like the conveyor inside. I had to rip those out and do a couple other things, and the tenant did the rest. That came in. He was a temp service, and they basically paid for the rest, and we did it. So.
Yeah, so there's not like environmental issues. That's what immediately comes to mind when you think of dry cleaners. Like they got chemicals, but like that's kind of old school, right? Like old school dry cleaners that truly had all their centralized operations in their retail store.
Well, they still do in some retail stores, but as long as you don't use Perk anymore, I think they stopped using it. It's called Percoline, I think, is what they used to use.
Okay,
and that was the one where it would contaminate everything. But I don't think too many places use that anymore. I don't think it's even allowed anymore.
Yeah, got it. And I know you're not into this side of retail, but you're in retail, so I'm going to ask you the question anyway. Yeah. I know that malls were already they were already on their way, like interior corridor type malls. But I mean, is it, in your opinion, is COVID-19 truly like the final nail in the coffin? I mean, do you feel, generally speaking, for the American, what we know as the American mall?
I would say we'll see how it works out with this vaccine. I mean, I know I haven't been in one since since it happened. So I'm assuming a lot of people are like me. I don't know if that can really go away. I mean, I don't know. I don't know. I mean, I guess we'll see with the vaccine. I mean, I'm sure there's people that still like hanging out there. It's kind of a different kind of a different mentality of why you go to a mall as opposed to a regular shopping center.
Yeah.
So I don't know. I know I had one as an investor. I was part of a group that invested in one, and we actually demalled it. But that was a horrible deal. That was probably the worst deal I ever had. I lost everything in that one. And that was actually a large Atlanta developer that everything he touched turned to gold except this thing. So.
Okay. Don't give any more details so that we're going to actually talk about that. I know that's part of the show. I told you I'd like to find out about that worst deal, right? The one that kept you up at night. You got gray hairs and lost sleep over, what have you. And so, but I want to finish up the pandemic discussion, and I spent a lot of time on this. I'm kind of sick of the pandemic discussion, but it's here and it's now and it's real, right? And there's going to be carryover from it. As we record this, just give you guys some additional context here. We're recording this on December 29th, and so more than likely, when you're listening to it, might be 5 or 6 weeks thereafter, but. More than likely, even then, we're still going to be dealing with pandemic discussions and fallout from it. But what are some of the what are some of the things that you and your team or your group is doing to? Well, let me back up a little bit. Do you feel that there will be opportunity in the retail space for you to acquire deals at a discount here in the coming months or years as a result of this pandemic in the retail space, in the neighborhood retail space?
I've tried, and owners are still trying to get the top price, and I think they're going to hold on to them thinking they can lease them up, but I haven't heard anything or found anything that was willing to sell at a discount. This one center was almost completely vacant, and they was trying to sell on a pro forma, and I'm like, you can't sell that on a pro forma if you're vacant. Well, if you can't, if you don't give me what I'm asking for, I'll just hold on to it and fill it up and then get what I want. I'm like, okay. So I haven't been able to find anything. I mean, I've looked. I thought that might be an opportunity, but as of yet, I haven't found anything.
Yeah, I mean, do you think it will come in time? I think it's too early, right? I think that a lot of, if it's, well, I guess if it's a retail center that was struggling and maybe it had, it was tied to CMBS debt, something like that, maybe so. But if it had a typical bank loan on it, I've found that most lenders have been fairly flexible with working with their borrowers, with the exception of CMBS, servicers.
Yeah, I didn't have that. My lender wasn't too flexible.
Oh, really? Okay.
No, it was actually. Well, I shouldn't say that. One lender that has two properties was another lender out of New York that was wasn't really too. He was like, no, you got to make payments. We ain't doing anything at this time. Just keep making your payments. I was like, wow. I said, you can't do anything? Nope.
Interesting. Okay.
Yeah.
Was that a bank or is this a private lender? Or?
It's a private lender.
Okay.
Out of New York, yeah.
Yeah. So. Got it. So let's talk about that most challenging deal, the mall. The guy, the developer that everything he touched turned to gold, with the exception of this one. This one turned to coal, right? What happened? Tell me about the deal. What excited you about it? And then ultimately, what do you feel went wrong?
It was a long time ago. It was actually one of my listings when I was a broker, and I ended up becoming an investor with it with one of my clients who was a big developer here in Atlanta, and we decided to demol it. And at the time, I was like, whatever, you're the king here. Whatever you want, it's good with me. I didn't know anything about it, so I was like, fine. And they did that, and it never took off. And then they had a huge mold problem where they had to rip everything out and redo it, which kind of killed it. And I mean, I had a 6 figures investment in it, and I lost everything.
Wow.
I didn't get anything back, and I was never getting any checks because it was always losing money. And I was like, man, it's my first investment ever. It was actually, and I was like, if I just kept this money and did that on my own, but I mean, you learn from it. So
yeah. When you say they were going to demol it, what were they converting it into, or what was
basically made it all office and outside retail. So The interior, they made different office spaces, and then the exteriors that were open, they kind of cut them up and made them into outside retail. Mm-hmm. And at one point it was good because they leased it all out. And then for some reason they lost a lot of tenants over the following probably 2 years. And then we had a mold problem, which I don't know how that happened because, at the time I don't know, but everything they redid had to be ripped out again and was all mold. And that kind of destroyed everything. And we just decided to sell it, and we sold it at a loss. Mm-hmm. So, I mean, everybody lost on it. So I wasn't, it was 3 of us, but, so that was probably, that's been the worst deal ever since then. I mean, luckily, God's blessing, every other deal since then has been a good deal. So, everything worked out.
Do you have anything in the works right now? Are there any exciting deals that are on the horizon as we speak today?
I kind of stepped back. I guess where I am now, I'm not in the building mode where I used to be. I guess I'm older now. I'm 56, and I'm kind of, I guess, in the mode where I'm trying to make a difference in something. So I've been kind of stepping back and trying to figure out what else I could do to try to kind of give back something. I've been blessed, and I've been, I think, very lucky for someone who didn't really have a lot of experience in it. Almost every deal that I've done since that mall has been an amazing deal, and every property that I still have is still doing well. And so I'm trying to figure out something. I haven't quite figured out what to do yet, and that's something I'm struggling with now. But I don't feel like I'm in my, I guess, the mode that I used to be in, my beast mode, where I wanted to become this, buy everything up and be the super real estate investor. And I've kind of, I guess, backed down from that. And I guess, it's just a different attitude now. If something comes across, that sounds interesting, I certainly would do it. But I don't have that where like every day I'm out looking for things. It's more if people, if it comes to me, that's fine. But,
so if opportunities come your way here in 2021, you're still an open and viable buyer.
Yeah, I mean, if something comes open, absolutely. I mean, I'm not shutting down completely, but I mean, if something is there. But I said nothing in the last 6 years. I did buy out 2 partners and 2 properties, so I don't have any partners anymore, which is, I guess, is a good thing. Mm-hmm. But I haven't found anything that's been real interesting. I mean, I bought them out because I couldn't find anything that was interesting, and I was getting a better return even buying them out on my own properties.
Yeah.
So
what do you think? How do you think the debt markets are going to be affected in, as it pertains to retail, being able to obtain new debt on a property, whether you're acquiring one or refinancing one of your existing assets? Have banks, stepped back for the time being with retail? I know hospitality they have. I mean, hospitality, it's probably nearly impossible to get a loan of any type outside of a bridge loan or a hard money loan. But have you noticed? I mean, I don't know if you stay on top of the debt markets, given you're not necessarily haven't bought anything, but I'm assuming you probably still have an inkling of what's out there and what's available. What are you seeing?
Most of my properties, except for one, are with actually local small banks.
Okay.
And they're still looking to lend. I mean, I was looking now. I talked to them, about this other property, and they were like, let's show us what you got. Well, if it sounds good, we're still making deals. So no one's actually pulled back. But I mean, I don't know much about the larger players. I've always had better luck with the smaller banks. They seem to be, more willing to work with you and build more of a relationship with the big banks. I mean, I have a big bank out of New York, which I'm just a number to them, and they didn't want to hear anything about. They just wanted to know, did you lose any tenants? Are you paying your rent? Are you still paying your mortgage? And that was pretty much the only thing I heard from them. But the smaller banks, they had worked out. Some of them were willing to work out some deals. Luckily, I didn't need it, but I mean, they offered it. So as far as if I find something else, I don't think I'll have a problem getting it financed. Because again, I work with a small group of banks, and they see, luckily I paid my mortgage on time. They've been happy, and they've been getting everything back. So I think that they wouldn't have a problem loaning again.
Got it. What advice would you give someone that's just getting into this, into real estate, and they've chosen, retail, neighborhood retail, however you want to classify, whatever classification of retail you want, but they want to get into the retail space? Is there any advice that you would give someone that's just stepping into the game today?
Again, which worked for me is when I started, and I guess it got a little bit more strong, is put other people's interests before your own. When I would make a lease deal, if I made an offer and they were like, "Hey, I don't want to do that, I'll do it," I'd take it if it was decent. I never held out for the extra money to be, greedy and make a couple extra bucks. To me, a lease space is better than being empty. And if it seemed to me fair, I would take it. I know when I was a broker, there were so many times that some of the owners would turn down offers, and I'm like, "Well, I'll just turn down that offer." I'm like, "Oh, it's not enough money." I'm like, seems pretty good to me. But I mean, everyone's trying to squeeze out the most they can out of it. And to me, it's just, I guess I have this attitude now where it comes back to you. I mean, you reap what you sow. I mean, if somebody needs help, and I'd take a chance on them. I've leased some people with low rent to start out first and let it build up. And I guess my attitude is whatever I can do to help you, to get you going. I would teach people, how to run a business that didn't have a lot of background, because obviously, I mean, it benefited me in the long run. But I mean, I kind of enjoyed doing that as well. But I mean, it was whatever I could do to help somebody, to get them started and get them going. I would do whatever I could.
Yeah.
Obviously, was I going to give someone, a year of free rent when everyone else wasn't? I couldn't do that. No. But I mean, as much as I financially made sense. And once I had that kind of attitude, how can I help you? It was a lot better than, what can you do for me, or how can you build up my bank account?
Have you ever had the opportunity, or have you ever partnered with any of your tenants in their business?
I did. It didn't go so well. I did when I first started out. It was a women's fitness center, and she wasn't doing well. And I was like, well, let me come in and be a partner. And it didn't turn out very well. She probably wasn't someone that should have been in business, and I didn't want to run it. I just wanted to invest in it, and I thought she would run it. It didn't quite go the way it should. I wouldn't shy away from doing that again. I would probably just do a lot more due diligence than I did. I thought I was a lot better at being like a manager than I actually was, and she needed to be micromanaged, and I wasn't doing that, and it didn't work out very well.
Yeah, fair enough. Well, Thomas, this has been fun catching up with you. Really appreciate you coming back on. For listeners that want to learn more about you and your company and what you guys do, where's the best place to find you?
www.tobenpartners.com.
Okay, fantastic.
TOBEN partners.com, yeah.
Got it, guys. And I'll also put that in the show notes. And Thomas, that's all we have for today. Again, thank you for coming back. It's good seeing you again after 6 years. Again, wishing you all the best here as we roll into 2021, and hopefully we'll catch back up here in a couple of years and find out again what's changed, whether opportunities came our way or they didn't. It'd be fun to look back and reflect again in a couple of years.
Congratulations on the new family.
Oh, thank you so much, Thomas. Much appreciated. And guys, that's all we have for this week's show. And so until we meet again next week, this is your host Kevin Bupp, wishing you huge success. You take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.